All right, welcome back to the Risk Reversal Podcast. I'm here with Sina Chehrazi. He is the founder, CEO of Nayya. This is a company that manages employee benefits. We're going to get into all of that. You and I have a bunch of things in common, which is kind of fun. We met, I think, last month through a mutual friend. We're going to talk about some of the news of the day, at least in the healthcare space. The Trump administration signed an executive order about drug pricing. That's something I'm sure that's near and dear to your heart. And we just want to talk about the macro a little bit, how it's affecting a company like yours in the private markets. You guys have done a handful of raises over the years. You have some really important and impressive backers, and you have a mission. And I want to see a little bit about who are some of the incumbents that you're trying to unseat or disrupt a little bit. So, welcome to the pod.
It's great to be here, Dan. You know, it's always crazy when you meet somebody in person that you've seen on TV for so many years. So been a big fan, and it's love what you guys are putting out. It's good to be here.
Well, I love meeting folks like yourself who you're a builder, and you're also somebody who has an ear to the ground a little bit about what's going on in and around you. Obviously, you're into financial markets. You're also a Georgetown guy. Well, I am just a honorary. My wife went there. My two kids are there. But not only did you go undergrad, you also got a graduate degree there.
I went to law school there as well. So 7 years in DC, which, you know, you'd say 4 years is more than enough, but it's a great town. There's a lot going on, especially now. A lot going on.
It is a great town. I love the town, and it's one of those places where, at least Georgetown in particular, I can't go there enough. I'm sure my daughters feel otherwise, but we really love the town. Let's go to your bio before we do the founding of Nayya, because I don't know too many tech founders who actually have JDs. So what were you going to do with that law degree, and at what point did you kind of change direction a little bit?
Totally. Well, I'm black sheep in more than one way. So I'm Persian by background, Iranian. My grandfather started the first mental health institution in Iran, and then he went and built 7, 8 more. And my father also a emergency room trauma neurosurgeon. My mother a healthcare bookkeeper. All my aunts and uncles shrinks. And so healthcare was just what I was supposed to do. But you know, kids sometimes they have that. You know, do you accept? Do you reject? Do you accept? I guess I was trying to reject. You know, the other thing that one could do is to go and become a lawyer. So I grew up healthcare family in the swivel chair in the emergency rooms or sitting next to my mom at home. And what I learned is healthcare is super painful when you're sick. Everybody knows that. Healthcare is super painful when you're healthy. Everybody knows that too. Just dealing with it. It's unbelievable. So I went to DC, managed to study business, work in a bit of finance, went to law school. I was a terrible corporate lawyer. It lasted like 25 minutes, but I was sort of on this idea of data and business and healthcare and like, how do these things all fit together? Moved to New York City, which was an unbelievable experience, still here today, almost 10 years later, and I ended up working at a couple of data analytics companies who were actually helping the status quo in a way, not in a bad way, just saying, hey, how do we use analytics to help underwrite and price risk? And I learned a lot about the world of health insurance, of life insurance, of property insurance, of fintech, that whole thing. And what hit me was, my God, you know, all of this money is being spent on all of this stuff. And is it actually working for the consumer? Is it, you know, all of us, anybody who's listening, is all of this money, this $3.5 trillion that's getting spent every year, is it helping us, or is it hurting us, or could it be helping us better? And so that's the bio.
Yeah. I mean, it's interesting that you had that family background. I'm sure they expected you to be practicing medicine by now. How were they, before we get to the founding of the business? Were they supportive of your decision? No, not at all.
No,
okay.
not at all.
But did that change though once you said, I got this idea?
Look, so actually funny. So my sister, she was part of the founding team. She's still with us today.
Wow.
She's the chief strategy officer. Cool. But I called her in a little bit like later, like, you know, 6 months in, 7 months in. And so when I recruited her out of her healthcare consulting job, by the way, you can see the Persian, you know, you can get away, but you can't really get away. When I recruited her, they called and they said, you know, just because you're screwing up your life doesn't mean you need to screw up your sister's life also. Which by the way, like, I'm super close with my mom and dad, and they're obviously super proud. But they've never really said, you know, so now company is We just passed serving 2 million people. Now we're getting towards 2.5. I think by the end of next year, we'll probably serve 8 million people. As you mentioned, raised a bunch of rounds, working with some of the biggest companies, growing hundreds of % a year. And I feel like we're probably 3 or 4 years away from like permanently changing the status quo. And so, but yeah, for anybody who's listening out there, sometimes you got to, as your daughters know, you got to chart your own way. And
I hope your sister calls your bullshit out every once in a while. I'm not saying I've seen your bullshit, but
she does. Absolutely. She's the level one.
All right. That's amazing. All right. So let's now talk about Nayya. Let's talk about like what the company set out to do and maybe a little bit how it's evolved over the years. Because you just talked about, servicing 2 million on the way to 8 million over the next 3 to 4 years. It seems like that's kind of hockey stick sort of growth. Let's talk about the platform that you built, and you were eyeing employers to serve employees.
Yeah.
Okay.
Yeah, absolutely. So what is Nayya? First of all, Nayya means renewal or new. Nayya is sort of like a Robin Hood, but instead of for your stock account, it's for your healthcare and your retirement benefits. We do sell through employers to serve employees because that's where the vast majority of people, consumers, actually get access to all of those benefits. So what do? We do 3 things. Number 1, we help you choose your benefits. Number 2, we help you with using your benefits, which can be pretty painful. And number 3, we use AI to make sure that you're not getting screwed. And you means everybody who's listening. So it's 2025. Starbucks is now spending more money on employee benefits than coffee beans. GM is now spending more on employee benefits than steel. This year will be the first year that Exxon is spending more on employee benefits than global R&D. This is a huge American tax, whether you want to call it direct or indirect. And that would be fine if the benefits are working for people. So Nayya comes in, we get deployed at the employer, and through allowing employees to connect all of their data, we, as I said, help you with choosing the benefits, using the benefits, and making sure that you're getting the full value out of them.
So you are, if I'm a consumer, if I'm an employee of one of your customers, do I know Nayya, or is it just kind of worked into, let's just say, your benefits, software and stuff like that?
Most of the time, half the time you know Nayya, you're like, oh, whoa, this is this thing Nayya, it's helping me out. Half the time, it's actually embedded within. We have a huge partnership with Workday, brand new. We have a huge partnership with ADP, where we're now being sold in pretty much every SKU of ADP sold in the United States, as well as a host of others. And so that's been a really good channel motion for us in terms of being able to grow really quickly. The reason why I love having the direct relationships with employers, though, is you get the best product feedback. You get like the rawest, this is what my people are dealing with. Leave of absences are just crushing me. And so being able to have a business that does both in terms of go-to-market, I love it.
Yeah, so you just talked about a direct relationship, but you also talked about some really important tech partners, which you said top of funnel, that sort of thing. When you think about those relationships, what is most important about how you partner with some of these tech companies like a Workday? I'm sure you're probably doing some stuff possibly with Salesforce and the like, or am I speaking out of school or no?
We're working with a lot of people doing a lot of different things. Okay. The most important thing, I'm just going to be honest, is like employee benefits is literally a $3.5 trillion industry. Advertising, like for example, social, that's 1.1 trillion, right? Like we're talking, this is one of the biggest markets in the world. And very, very few people, let's just say, like devote their life to understanding it, which I don't blame them actually. And so whether it's a Workday or it's an ADP or it's a Paychex or an Oracle or anything else, right? They're there to serve the full employer across payroll and applicant tracking and compliance and that sort of thing. And benefits and this benefits thing. It's hard because whether it's working with them or whether it's working with an everyday employer, everybody knows at the consumer level, man, healthcare, that's rough. Like what plans should I choose? Shoot, I got this bill. Should I pay it? Is it the right bill? Is it the wrong bill? What options do I have? Everybody has like the consumer pain, but not everybody's sort of super versed in the industry to say, hey, if we wanted to just blow this up and fix it, what would we need to do? And that's a big part of my job.
So when you started out, you just mentioned use AI to make sure people aren't getting screwed. What was the year you started the company?
We started the company, we launched the first quarter of 2020, so it's been over 5 years now.
Okay. So you're one of these companies that you were always AI first from a tech stack standpoint. There's a lot of companies who kind of pivoted over the last couple of years because your model, I guess the platform that you built probably doesn't work as well without some of like the tech that you kind of embedded. So talk about the tech a little bit and how that kind of enabled you to create a platform that was going to be really interesting for a bunch of employers or these companies that are basically selling your services to like cross-selling to their existing 100%. Customers.
So look, I almost dropped my coffee this morning because I was reading this article around, Klarna has been a total market leader in terms of, hey, we're going from service center to like full AI. And this morning that piece came out that said, again, earlier this week, that piece came out that said that actually they're reverting that. They're actually going to be reintegrating humans because AI can't really acknowledge or handle all the edge cases. To answer your question more directly, at Nayya, the reason when we say renewal, the way we're solving this problem is we are co-locating the world's data. We're allowing people to connect their healthcare information with their mortgages, with their bank accounts, with the like. And when you connect all of that information in one place, first of all, you see people for who they really are and what help they need. But second of all, to your question, that's what unlocks the AI. Data unlocks AI. And what we've done is our platform natively connects all that information so that AI can actually be unleashed. Can I give a specific example?
Of course.
Every year, about 850 million medical claims in the United States are rejected.
Wait, say that number again because it sounds astounding.
850 million.
With an M.
With an M, that's right. Dan, let me ask you a question. I'm going to put you on the spot. Can you guess what percentage of those 850 million are appealed by people?
All right, no one said there was going to be any math here. So what percent? I'm going to say at least 50%?
1%.
What?
1%.
Wait. Hold on a second. So if you are a consumer and you have healthcare coverage, most people through their employer, and you put in a request for repayment, let's say you go out of network or so, is that, and 1% of those people.
Some people they're paid the money.
Yeah.
Like let's say I go out of network and I filed my claim with, I'm not going to use, why not? We're here. I filed my claim with Empire Blue Cross and maybe they're going to pay me and we'll be good. But about 850 million times a year, I don't get paid and I'm not good. But 1% of those claims are appealed. Those claims are appealed. And the reason why only 1% are, one more question, and then
no, keep asking. I mean, usually I ask the questions around here, but no, give it to me.
Of those appeals, right? Of that 1%, and a lot of numbers here, but you're a numbers guy. What percentage of those appeals do you think are accepted, are approved, and they get the money anyway?
I'd say 50% again.
75%.
Oh, really? So the act of just doing it.
It's unbelievable.
So you make the chances of getting it back. So what is it? Education? What you think employers would be helpful in some of this knowledge or no?
It's tough, right? Like
because you want happy employees, right? You don't want employees saying, "Oh, that healthcare plan that we have sucks."
You're right. At the same time, maybe I'm going out of network to the Upper West Side to see a psychiatrist. I'm not exactly going to call my boss or HR and be like, hey, I'm dealing with this issue with the psychiatry claim that I have, right? Like it's all a bit, right? That's the beauty of technology. That's the beauty of AI. That's the beauty of data. What we do at Nayya, for example, one of the things that we do out of a couple hundred is we'll see those denials and let's just run with that example. Let's say I really do need to go see that psychiatrist because of something else something I'm going through. What we will do is because we've connected the data from the benefit plans, so Nayya knows what I have. Because we've connected the data from the claims, Nayya knows that I went to this out-of-network psychiatrist and that's what's being rejected. And because Nayya's integrated so much, for example, medical research, we pull from Harvard or we pull from Stanford or California databases and we in real time, you can watch the AI agent draft the appeal letter for you in less than 3 or maybe 4 seconds. And what you'll see is link, backup, Harvard, Stanford. This employee needs this coverage from this psychiatrist. And we will programmatically, automatically send that to Empire Blue Cross before you even realize sometimes that you've even been rejected.
Do they hate you guys?
I think that, we have a lot of enemies, a lot of friends too.
Yeah.
And
so they're frenemies a little bit. But you guys are doing something though. You're like the tech is enabling this at like scale, right? Because what was probably they knew they had on their side is that when people are faced with trying to get $300 of a $500 bill, and the idea is like, yeah, that's a lot of money, but like how much time am I individually going to spend to doing that? We have a situation in my own family, which for my wife, it's nearly a part-time job getting this. And I want to talk about consumers at some point who maybe don't have this offered. So the healthcare providers, they don't totally hate you, or like how does that work? How do they think about you guys?
Well, I'd say this, as much as I'm like the first person to stand up and scream and say, hey, this industry is like the biggest consumer problem on planet Earth in terms of at least in our country, there actually are a lot of people in the industry that are trying to make it better. That's true. And what AI can do for them is there is a lot of cost. There is a lot of fraud, waste, and abuse in the system. And so if you can go to the insurance companies with an offering that says, hey, here's the deal we're going to make. We're going to help you use AI and technology and data to reduce your costs, to increase automation, to cut fraud, to make sure things are legit. And in return, we're going to get more money into the hands of consumers.
You think it balances itself out in a way?
We've seen it. I mean, look, I know you're often on CNBC. Aflac's a sponsor of CNBC's. Aflac's actually a huge partner, client, customer of ours. MetLife, huge customer, client, partner of ours. And what they do is, we went to them and we said, look, if we could find a way to find, audit claims and pay them out to consumers, and we can also reduce costs for you, and everybody can win to a certain extent. All the wasted stuff can go into people's pockets effectively, but then you have a happier customer, you have a happier consumer, you have people who want to stay with you for life. And they said yes, they're market leaders, right? And so I think it's just a matter of time till there's so much pressure on everybody else that they say, all right, listen, let's make America what America should be again.
Don't say it, because it's the quickest way to lose your mic here. No, I'm just kidding. So normally a company like yours, you're setting out to disrupt an industry. So it seems like to some degree you're kind of partnering with that industry that you're also looking to disrupt, but you found a way where you can make it really beneficial to employers, employees, because let's call them attached at the hip as far as their satisfaction with their kind of healthcare offering. And then the companies that spend a lot of time looking to maximize their bottom line by using a whole host of, and they have their own data in which to do this sort of thing. So that's pretty unique, isn't it?
Totally. I think it's been the single hardest thing about building this business is there are so many incentives. The HR platforms that we talked about, Workday, they've got employers, employees, you just mentioned them, the insurance companies, the 401k companies, right? Like, do you put that next best dollar to an HSA account versus 401k? How do you unify all those interests? The thing is, it's just, I hate to say, like, it's so, everybody has so much, it's not working for really, I mean, there's so much opportunity to align those incentives that you can build a really massive company and get everybody marching in the same direction. The strongest markets are where the consumer wins. Look at our financial markets. And so that's what I feel like we're looking at the next 5 years in this.
Well, that's cool. And one of the thing about dissatisfaction, I'm just curious, I mean, that horrific event in New York City a few months ago, supposedly, and maybe he could have used that psychiatrist on the Upper West Side, but this horrible act, right, where this young man gunned down a UNH, right? It was a United Healthcare executive. And supposedly it comes from, again, a lot of unhappiness about certain claims that he had and the like. What was your reaction to that? Take the worst part out of it, but let's just talk about the sentiment. And like, is that a sentiment that you understand given from where you are, or was this just kind of a one-off case and that sort of thing?
There's such a deep sentiment. I just wish I could airdrop it from my brain to everybody who doesn't like live in this every day. I can't do that, but I get to be on your show and try a couple of other things. And now that's obviously a way step too far. But look, 40% of Americans don't have $1,000 in their checking account. 530,000 filed for bankruptcy last year, mostly because of medical debt. That's the same as the city of Atlanta. And by the way, a lot of these people are employed. In some circles, this is not a very big topic of conversation, but in others, it's the only conversation. And so it is a deep rooted, like this is going to be fixed. The great news is like all the technology's here, all the data's here, all the transparency's here, big capital, big money I wish Elon and Doge would have just gone after, hey, we're going to clean up healthcare and insurance and maybe a little bit of retirement, although that one's better.
RFK Jr. is trying to just kind of cut everything.
Unbelievable.
Right?
Wow.
Right? Yeah.
Wow.
How are you guys thinking about a consumer who works for a company that doesn't have, the access to a platform like Nayya? Will there be a consumer offering?
100%.
Yeah.
100%. Employer, I think for the last, call it 5 years and probably for the next year or two, has been a really efficient way to build scale.
Yeah.
But if you're an independent contractor or whatever that might be, like you don't even have an HR administrator. Yeah. You don't even have a Workday. You don't even have fill in the blank. It's just you're figuring it out. So we're gonna do that. The most important thing to me before we do that, Dan, is that I want us to get to a scale and a size where this world needs an honest broker, an honest advisor. So I want to make sure that however it is we do it when we're going into the consumer world, where you don't have an employer paying you or something else from a paternalistic perspective, that it's clean, it's clear, it's transparent, and it's consumer first.
Yeah.
And we can do that scalably. And once we figure that out, then, and once a little more time goes, it's 100% right.
That seems like a consumer product that would just catch fire. If you think about it, because you're taking something that a lot of folks might not know that the ability to kind of process claims this way or to do appeals and kind of what the success rates are, that sort of thing. It seems like it would be a very popular thing. All right, so you built technology, you have a platform, you work with some of the biggest companies in America. I have to assume that there are other verticals that this, process and technology could really be effective with, even like, not even, but across a employer benefit suite.
Yeah. So coming out next year is we're launching a bunch of new modules around retirement. Hey, you get a raise. We see that triggered in your Workday. Should you put more money into your 401k? Should we pass it to some experts to have it expertly managed? It's an area that you know quite well. We also have a RX, a prescription drugs guidance platform that's coming out next year to help people, not less so on like the traditional health and insurance side, but more like how do you manage prescriptions. And most people don't know that the price of every prescription changes every day at every pharmacy in America, right? Like all that stuff. And so those are two big releases we have coming out over the horizon, both from an AI agentic perspective as well as baseline software. And beyond that, we're just going to keep growing. We're just going to get what we've built into people's hands more and more.
All right. So you talked about agent, you just said agentic. A lot of folks think about generative AI and they think about, okay, there's been hundreds of billions of dollars that have been built out to create an infrastructure. So companies like yours can build on top of that, create agents, and that's going to be this application layer where a lot of the value hopefully will be extracted for a lot of these companies that choose to employ this technology. They use the clouds like Azure and AWS and GCP and that sort of thing. So talk to us where we are, because one of the kind of potential knocks, so it's not a potential knock, is that, okay, all of this investment is not going to yield anytime soon, like a return on investment if you are a company, whatever, you're a financial services company, whatever the hell you are. But the whole idea is like once you create agents, that's when you're going to see the value be accrued. Does that make some sense? And then where are we in that process?
Man, I would definitely quote myself as more of a data and sort of benefits healthcare financial expert. But I will say, as an entrepreneur who's deploying AI every day, I think that we are, an amazing company. To answer your question, an amazing company, a company that I think 5 years from now will be so many times the size it is today's Workday, because what Workday has sort of put the flag in the ground and said, these agents, this AI, this return on investment, it's going to be limited by how clean and connected and co-located all the data is. So they've publicly started talking about this agentic AI system of record where any agent app, be it Nayya, be it Robinhood's robo-advisor, be it anything else, can actually just come and sit on top and pull from their data to drive these use cases. I think we're sort of going to we're at the point now where there's been so much money pumped into from venture capital and the like, my prediction is over the next year or two, there's going to be sort of not necessarily a depressive move, but people are going to realize that like AI is not there are incredible amounts of limitations with respect to the data. What matters from a context perspective, what's connected, what can be used. And we'll start to see this bubble pop a little bit. That doesn't mean that 5 and 10 years from now, this isn't going to change the world. But yeah, 10 years from now, I'm having my first kid, in about 6 weeks. And my daughter will have for sure, at age 5, a personal assistant, an agent who's going to help her manage all of these things. And like, I know that for a fact because I see what's being deployed every day. And I'm just like, God, I could never have imagined 5 years ago that I would be seeing what I'm seeing now every day at the office. But again, between now and then, there's just so much.
So I've had a couple of pods. I had a friend of mine named Dan Benton the other day on the pod, and he's like a genius tech investor. He was one of the most successful tech investors in the 90s and the 2000s, ran a massive long-short hedge fund. And, we had this debate a little bit about agents. And, to me, it is about trust, right? So when you think about, where you are serving, healthcare, it's about as important as anything, right? And then when it comes to people's money, which is also related to kind of the sector that you're most focused on, in finance, it's also one. And I think it's going to take a long time for consumers to be able to trust an agent on this side of the fence, one that you have to kind of, just let it rip, a little bit. I just think that there's going to need to be like a bit of a human touch as it relates to agents for a while. And I kind of take the over. I'm not disagreeing with you.
Yeah.
I mean, I think you would say, well, it's semantics. You know what I mean? Because at some point, whether it's 5, 7, or 10 years, it's all going to happen, right? And you've seen that borne out by the way you're employing this technology. Is that fair to say?
Totally. You already hit it on the head. It's I'm not sure. And when I say I'm not sure, I actually mean I'm not sure. There are a lot of other experts. Like me, just let's take me telling Robinhood from a trust perspective, hey, take 15% of my paycheck and just run with it. I don't know. And I'm a pretty, I use a lot of technology. Where we're really focusing on is those specific moments where you can build trust with a human being through agentic technology. Let's just take the one tiny example we mentioned earlier about filing claims. Like, hey, I'm an agent and I'm going to draft this appeals letter for you and I'm going to submit it to Empire Blue Cross so you can get the money that you're owed, so we can get that back into the household. That's the only question we're asking. That's the trust we're asking to give us. And we think but you hit it on the head. It's like, different trust for different things, and we're trying to build as many agents around this trust building agents as we can, and we feel like there's just an amazing opportunity.
Well,
there.
I think what you guys do is only additive to a process that people are very dissatisfied and they don't really know how to navigate. But on the flip side of it, you're hearing these examples all the time. It's like you say to your agent, I want to go, a week trip to Machu Picchu. You know what I mean? Book me my flights. Book me like the hotel in Cusco before I go to Aguas Caliente, and then I need guides to do that, and where should we eat and all that sort of stuff, and that's just going to do it. I'm taking the over on all that.
Yeah, me too.
Yeah, right. And the flip side of that is like, I'd much rather get on the highway in a Waymo, you know what I mean? Right now, it's just ring fence, geofence, that sort of thing in San Fran or LA or something like that, than I would letting an agent go batshit crazy with my credit cards and all that sort of, you know what I'm saying? Like, so that'll be interesting to see how it plays out. Totally. And I actually think the Waymo rollout is probably going to be an interesting analogy on the trust front.
Totally.
If that makes some sense.
I love that.
Yeah.
I love that.
You can use that. I just came up with that on the fly.
There's 100% chance I come up with that again, which is like Waymo. You see, I mean, look at the user numbers, right? Like, but in certain neighborhoods in San Francisco, it's just like a native thing. Now, I don't know if you drop a Waymo. I don't know. What would that be like?
Well, think about this. Right now, Waymo rides, and a lot of it is just because they're just not deployed in a handful of cities, that sort of thing. They're probably a fraction of 1% of Uber rides right now. Like, you know what I mean? But they get a lot of attention. We've taken Uber, you know what I mean, and we just said it's part of our life. It's a verb now, right? But go back 15 years, there were probably a lot of people saying, I don't want to get in a car
with a stranger
that's
out of the airport at 11 p.m. at night to go and drop me off at home. Are you out of your mind?
100%. So earlier today, this is Monday. I think by the time you're listening to this, it'll be later on in the week. But President Trump signed an executive order directing his trade representative, I'm just reading this right now, and the U.S. Department of Commerce to take action on policies that suppress drug prices overseas. The order aims to lower drug prices in the U.S. by aligning them with lower prices paid abroad. The Department of Health and Human Services will open negotiations with the drug industry. All right, so let's just kind of break this down a little bit. You're a free markets guy. I'm a free markets guy. This doesn't seem particularly free markets. A lot of people look north of our border and they say, well, socialist medicine in Canada, it's shit. You know what I mean? Anybody who's got money, they have their own private doctors, right? And so when you think about our stance towards this, and we just talked about some of these big healthcare companies, they've been allowed to run rampant, you know what I mean, on their, basically the way they operate their businesses. There's middlemen like PBMs and all this sort of stuff. And the consumer's getting screwed left and right. But that's free market capitalism, right? Yeah. So the administration, which is basically free markets, unless in this instance they want to put their thumb on the scales. Now, you and I can agree that this would only help consumers, right? So how does this play out, right? Because these companies, like the massive, pharma companies, they take a lot of these profits, and there are a lot of profits relative to healthcare companies abroad, and they invest in R&D. They all want to find that next blockbuster drug, which they're going to make tens of billions of dollars on. So GLP-1s. I'm and Fast Money, our kind of head GLP-1 correspondent. I love the drugs personally. All right, so talk to me a little bit how you're sitting in your desk, you see this news kind of hit, on the internet and whatever. What is your first thought process, and how are you guys navigating something like this?
First thought process is thank God.
Really?
Yeah. I mean, I'm a free markets guy, as you mentioned, almost to a fault. And I know that it would make my business more complicated, but I've being and having done what I've done over the last 5, 6, 7, 8, 9 years, I would be non-free market on healthcare.
All right, so what that you've seen, so there's the consumer element of it, right? And you're about to go in it, man. You're having a baby, and congrats, by the way.
Thank you very much.
In 6 weeks, but my kids are in college, as I mentioned before, and the complexity of the healthcare system, and I can tell, and I know you know this from your family, actually, it doesn't really get any easier, you know what I mean?
Yeah.
And then at some point, my kids are going to have to go figure out insurance on their own, and they're not so talk to me a little bit about that, because it's like one of these things that is going to be with you unless a company like yours can make this better. So drug prices going down should benefit everybody.
100%.
But
drug prices going down should benefit everybody. Let's go back to the crux. Not that long ago, we passed a law in this country called Obamacare. And a lot of people like Obamacare. A lot of people don't like Obamacare. We won't talk about that either way. What we will talk about is Obamacare had a very key provision that they stated based on the type of health plan. You must pay out 80% or 85% of the premium you pull in out in claims. Seems like a good idea, right? Classic Washington Dante road to hell. Why? Because if government starts getting involved in this free market in this way, let's say before a C-section cost $10. Well, if a C-section costs $10, that means I need to pay out $8 in claims. I'm the health insurance company. That means I can only keep 2 for myself. I don't want the C-section to cost $8 anymore, Dan. I want it to cost $800. Right. Because I can keep $200 for myself. So the
incentives are just not aligned.
I want the C-section to cost $8,000. Insurance is supposed to be the check on drug prices. United Healthcare, or that's a bad example because they're also, a lot of the major health insurance companies now have their own PBMs, but let's just say a health insurance company that doesn't have their own PBM, it's supposed to say, hey, listen, Pfizer, no, not paying that. I'm using this biosimilar. But they, as of, 15 plus years ago, they don't necessarily really want that. So then you have the drug companies coming in. And they're so good at saying, oh, pharmacy benefits, it's so complicated, all this, we need to R&D. Here's the bottom line. We are less than 5% of the world's population paying 3/4 of the profits of the drug companies. Who's paying that? Employers. Employers are spending, on average, over $2,000 per year per employee. And then forget Medicare too, of course, once you turn 65 and beyond.
So who's in cahoots with who, though? Because if the employers are cut, this is, some of the largest, companies in America. Why would they be willing to kind of put up with that? You know what I'm saying? Like, they have huge lobbies, and the pharma obviously has huge lobbies, and these healthcare, administrators have huge lobbies. Are they also all slamming into each other and they can't figure it out, like how to make it good for all of them?
I would say, based on my experience, so the employers are getting hosed. the consumers are getting hosed, where the buyers are getting hosed. The health insurance companies are making money because as the price of GLP-1s or whatever it is goes from 1,000 to 2,000, 3,000, 4,000, 5,000, they're making more money. Same thing with the drug companies. They're making more money. So there are winners and losers in this. The lobby of the winners is a lot stronger than the lobby of the losers. And these employers, I mean, look, JP Morgan and Berkshire and these guys try to come together and do something, but it's hard. You're not in the core business of buying healthcare. You're in the core business of cranes and banking and technology, right? And then you've got this other thing that your CFO doesn't really understand too much, except for how big the line item is. Then you have a CHRO who maybe comes up through talent acquisition or whatever else it is. Then you have a benefits manager, a head of total rewards, who's now nestled within the bank that's responsible for negotiating and fighting against the drug lobby of Pfizer and United Healthcare. And it's ridiculous. We have to stop the runaway cost of prescription drugs in this country at almost any cost. If we don't, then our companies will continue to be less competitive. Our consumers will continue to we'll see more bankruptcies, we'll see more pain, more foregone sort of and pushed off care. And I really, really hope that they can figure something out, because this is one of the biggest crises facing our country.
All right, so one of the biggest companies in the space and one of the largest market cap companies in the market as of just a couple months ago, this is United Healthcare. Let's just pick on them. They had this horrible earnings report, I want to say like a month and a half ago. The stock is down nearly 40% from its highs late last year. Those were all-time highs, but from the highs just, I want to say in mid-April, is down 37%. What's happening here? And I'm not asking you to kind of opine specifically on United Healthcare, but was there a bit of a sea change over the last sort of year or so? Because to see a stock like this move like that, and I'm more of a tech guy than anything else, that's pretty astounding there. So are these companies starting to see a hit on their margins? Is it because of companies like yours?
I don't know if it's about companies like us yet, but what we're definitely seeing in the space is an elevation of the zeitgeist. Look, you and I are here we could be talking about so many interesting things happening in the world, China deal, whatever. I know. And and people are learning more about this, and they're seeing the denied claims rates. And of course, terrible things are happening in New York City. And of course, PBMs are under scrutiny. And then you've got a president of the United States who's tweeting about it on Sunday night at 11 p.m. And so what's happening is, right, sunlight is an incredibly powerful form of disinfectant. And what we're seeing is like some sunlight being shown on these practices that make it hard to benefit from the opacity. And so I think we saw in UNH's earnings report, utilization went up. They were probably not, auto rejecting as much. We also see that, the government's paying out less in Medicare. From a reimbursement perspective, we see outpatient volumes going up. But what's so crazy is you'd think this is a company that's so insulated from tariffs. Like, why is it not just ripping, right? I think it's just because there's just a lot of sunlight.
That's a great point. I mean, like a lot of folks over the last month and a half or so have focused on, companies here in the U.S. that either manufacture here and they're going to be insulated from tariffs and they don't have inputs coming from overseas. But here's companies that basically service, Americans, and there should be no reason for that. But this company, they lowered guidance. They missed. This is not something that you've heard from a company like United Healthcare.
Not as long as I've been doing this.
In a while. All right, so you talk about sunlight, okay, so it's like being shown on these business models and the like, and I think the example that I just used, if you think about hundreds of billions of dollars in market cap from a company like this, it looks like Wall Street's also paying attention. So speak to me a little bit about that, how you kind of take a look at the entire ecosystem and what you choose to focus on.
Certainly the public's paying attention. And I think because the public's paying attention, Wall Street's paying attention, right? With any of these kinds of moves. I have to say, one of the things that's been the most surprising to me on this journey is that, Wall Street's filled with some of the, in my opinion, people way smarter than me, smartest people,
but I've been in Wall Street for 30 years. And you and I have been doing this for 35 minutes right now, and I'm going to take issue with that. But go ahead.
I just, I hear some of the questions that the analysts ask, and I ask myself, how is this going to get better? I'll give you a really quick example. In health insurance, there are two kinds. There's medical insurance, and then there's everything else, right? And in the everything else, let's just say like a supplemental health or a dental or whatever else, there's a term, it's called a benefit ratio. I'm not going to put your audience to sleep. Benefit ratio basically means this: the amount of every dollar that's paid out in claims, not unlike what we just talked about with major medical with Obamacare, 80% have to get paid on every dollar. You'll hear a publicly traded life or health insurance company get onto the call and say, dragging on earnings this quarter is that our benefits ratio increased from 50 to 55% on supplemental insurance. And Wall Street will listen to that, and the analyst will say, oh, well, is that going to be a long-term thing, or is that not going to be a long-term thing? I'm sitting there and I'm like, the benefit ratio is 55%.
Yeah.
After all the money's getting brought in, they're paying out 55 cents on the dollar on claims, and the rest is going to commissions, is going to, I guess, expenses, not to consumers.
Yeah.
They don't need to be making 30%, 25% margin. And, some insurance companies are paying out more in commissions in some states than claims. And so why do we not have, I guess, whose job is it anyway? But doesn't the analyst, whomever it is, understand that, if this does not get better, these won't be real businesses because it's not sustainable for anybody, right?
Yeah.
And so I think that the public's paying attention, Wall Street's paying attention, there are big moves happening, POTUS is paying attention, everybody's paying attention. What I really hope is it converts itself into I'm going to get into the details and understand this, and we're going to call balls and strikes about what we want the next 50 years of American healthcare to look like.
Yeah, but wouldn't a bunch of these pharma companies go out of business? Literally go out of business if they don't cut costs dramatically. Let's just say this mandate is put in place. It's going to take a while for this to happen. You know what I mean? But you'd see R&D be pulled back dramatically. You'd see lots of cost cutting. These are some of the biggest employers in America, right? When you think about the pharma companies. And so, it was already starting to happen. A good friend of ours, Zach Rattano, who's the founder, CEO of Ro, which is a telehealth company. They were a couple years ago, they went all in on GLP-1s. They were one of the largest prescribers of those drugs, I want to say back in 23, starting then. And, a lot of their competitors were using compounds, right, that were much cheaper, but it was more complicated, right? And there was less trust around those. And, Ro was prescribing drugs from, Lilly and Novo Nordisk. They were the two largest, makers of these drugs. Well, they have seen coverage rates were kind of low. And part of their edge was why you would pay them is they kind of help, not too different than what you guys do. They help coverage, right? And then the drugs were $1,200 here per month versus overseas, much, I think $200-$300, that sort of thing, which speaks to everything that you've just talked about. But an announcement like these companies have been negotiating because compounds, I guess there was rulings that they can't be, prescribed through these companies anymore. And the pricing has come down from $1,200 to $500 full pay on the way down to, let's say, $300. Have you ever seen a decrease of the prices in drugs? And this is before this executive order.
Totally, no. And GLP-1s are getting a lot of attention. Talk about economic pressure. Yeah. That's, I think, what we're talking about right now. We're talking about economic pressure. Yeah. And that's an area where we're seeing a lot of improvement or deterioration, depending on which side of the. But I would just say, Dan, if you're in a business that requires you to charge an old lady in the United States 5 times more than an old lady in Great Britain, then it's not a real business. Yeah. And I would say that, I don't know, there's just, when they say shocks the conscience, there's got to be something in the middle between shocks the conscience and making the drug companies go under. I think we got to find that middle. And I think this is the early days of that.
Well, I love it. I mean, this is one I think regular listeners know. We haven't done too many of these conversations in this year. And, when I met you and we started talking about Nayya and your mission and your background also, which I find pretty fascinating, I said, we got to do a podcast together because it's not one of those things. I'm sure there's lots of VCs who are listening to this and saying, I looked at that company and I passed on them. And you know what I mean? I like listening to, Sina right now. I was like, damn it, I wish I did that. Or the scale in which you guys are deploying your services and the tech that you're using and the valuation that you've been able to accrue, it's pretty amazing. But also, this is stuff that I think is near and dear to almost every consumer's heart. And it's the most important thing that they will do in their lives. You know what I mean? It's your health, and then maybe the money. But Sina, I really appreciate this conversation. I think you guys are going to be at the forefront of this conversation as it relates to, and you got to come back and you got to talk to us more about it. So I really appreciate you being here.
I appreciate it. Appreciate you having me, all the content that you guys put together. if you don't have your health, your wealth doesn't really matter. And the strongest irons are made in the hottest fires. I think we're early. I think we're going to raise hundreds of millions more. I think we're going to change this permanently. And Lucy, so for when you're born, this is going to be the fight that we're going to be in until the end. So,
I can't wait to see a picture of Lucy. So listen, man, I appreciate it because this is something that should be near and dear to everyone's heart. So
thank you, Dan.
So much.
Thanks so much.